Welcome to the Trader's Edge. I'm Jim Uriel. That's Bob Iaccino. Thank you guys for joining us. This is one of my favorite shows to do because of the live element of it. Bobby, I just told you a second ago, like the bond market closed at 2, and I felt absolutely sound asleep for like 25 minutes. Do you ever take naps during the day? Do you find them helpful?
I do it almost daily, buddy. Usually between like 5 and 15 minutes tops. And it actually replaces coffee for me. I just have coffee in the morning now.
Oh, see, so when I wake up, I have to have a shot of caffeine to like bring me back into the game. So
you know what? I may try that.
Yeah, it works pretty good. Okay, so what did you find was the big story today? I mean, stock seems pretty buoyant. What do you think is causing it from a fundamental standpoint?
Well, I noticed the overperformance of the Russell. To be honest, I should say the outperformance of the Russell.
Oh, so I thought that was interesting.
What's that?
It's an interest rate thing is what you're going to say, right?
Yeah, of course. And, if you look at like the sector breakdown for the top 5 performing sectors today, the best performing sectors are well represented in the NASDAQ. It's financial, healthcare, consumer discretion, and industrial. And those were 4 of the 5 top performers, and they are deep into the Russell. So technology didn't do so great. The NASDAQ had to wait till the end of the day to catch up. So I definitely think that's a rate story, 100%. You saw that ADP number. That's now 3 of the last 6 ADP number. And granted, there are revisions in there, right?
Yeah.
But 3 of the last 6 ADP numbers have been negative. So this is the last monthly jobs data the Fed's going to see before their meeting.
Do you think that now with all the stuff that was going on with the BLS data, even before the government shutdown, then comes the government shutdown, are we going to get to a point where JOLTS and ADP are more important than the BLS bullshit data?
Yeah, you read my tiny little mind. I don't think JOLTS will be. I still don't think JOLTS will be because they have to have a more consistent method of collecting the data if JOLTS were going to be. But I think ADP will become a lot more important. I really do.
They're the ones that write the checks. Why wouldn't they be, right?
I don't know why. I mean, I guess government jobs do go into the economy, but it's not an indication of whether the economy is strong or weak.
Not at all. We created a shit ton of government jobs through the whole Biden administration, and all of it was on the backs of deficit spending. The whole thing was absolutely absurd that we were pretending we had a great economy when it could not reach takeoff speed. Anyway, let's bring on our guest. One of my favorite guests. The way I construct my portfolio is always after I talk to Mike Arnold. I'm not even talking about trading. I'm talking about trading, intermediate accounts, and long-term accounts. Mike Arnold, Chief Strategist of Path Trading Partners. Let's bring him in. Mike, where do you fall on the naps thing?
It depends if I slept the night before.
Are you a good sleeper, generally speaking?
No, I'm a horrible sleeper, and I have 4 dogs, and one of them's decided that the best thing to do all night is snore, like sleep apnea kind of snoring.
The new dog we have she'll sleep till like 6 a.m. fine, but once during the night she'll bust through our door. She'll come running in the room, sniff us both, wag her tail, and then run back to her couch and sleep the rest of the night. It takes like about 10 seconds, and it happens every night. I think she's just like, you guys are still here, right? It's pretty damn funny.
Anyway, that's up. All mine get up at 3 a.m. So guess what time I'm up? Every morning.
That's when you have to get up, right? Let's talk about markets. Okay, so if you guys caught us on our other show on Monday, we broke down some things from a technical analysis standpoint, and I think there's very, very interesting things happening, which might not even be something. Mike looks at a very specific set of things, and everybody doesn't look at the same things. 80% of what I look at is crossover, but I want to ask him a couple things. Can we bring up the S&P futures?
Sure.
Or Bobby, do you want to do SPY instead? What would you rather do?
No, honestly, it doesn't matter to me. Jim or Mike, whichever one you got ready is fine.
I got them both ready. We can touch
on
both of them even.
Good.
Yeah, let's do the SPY. Luis, you have it to put up or not?
There we go. SPY, there you go.
Okay, so from just a standpoint today, I love the fact that this bar kind of broke above the highs of the bars from the last 3-4 days. Does that mean nothing to you? And if not, tell me what does matter.
Well, I was watching for a solid breakout pattern. Again, 683.25 was a very key level in the spiders, and we did break above it today. We finally ticked off the 87.5 harmonic rule with the high today, straight to the 87.5, which qualifies the longer term chart as the higher probability potential double top. Does not mean this market has to reverse. It's just now the higher probability level based off the price action from the spider. So on the spider chart, we do have a major topping pattern that may never trigger.
This particular chart is one of the reasons, and I might use this as an example. Mike, that's a daily, right?
Yeah, that was a daily. I just switched.
All right. So I have a thing I do, sort of like a classroom I do every Friday, and it's only 30 minutes. But the guy who hosts it always says to me, so I want to buy it above yesterday's high, put my stop below yesterday's low. There's a constant theme with him. He's like, that's my trade for today. But if you look at this one, to what Jim said, now Jim's not saying it just because it's a couple days ago high. He sees a little rotation, then a move back up. But Mike taught me this a long, long time ago. It's not what happens, it's where that thing happens at that matters. So even though we're breaking the highs of a couple of days ago, there's a level above it.
Yep.
You know, levels are areas, right? They're not hard, fast numbers. So when you see, like, 2 days ago, 3 days ago, the market test the area and not get through the level, the highs don't matter as much because they haven't gotten through the level. The level still matters. So I just wanted to use that as an example. I want to look. Can I look at something, or you need to go more, Mike, on this?
Well, I have one question on this real quick.
Oh.
If we settle that market above today's high or that red bar from a long time ago where you drew that harmonic, if we settle a day above that and then any kind of subsequent strength after that, do you think we're off to the races to the upside? Will it negate the double top pattern?
It will. The double top pattern will not be negated. I'll give you the exact level. We can go to new highs and stay within a double top pattern. The double top pattern will not be negated on the spiders until we trade above 699.41.
Got it.
So yeah, we can go to new highs. There's still a gap left behind from October 29th that I could still see being filled over the next few days. And then if we break out higher, which is, December's 73% odds that December will end positive, which, based off of where it started, we'll see. But because it already rallied pretty strong into December 1st. But again, the next key harmonic, should we get above the October 29th highs, is 694.50. 694.50. Keep that in mind as the next key target should we break out above the October 29th highs.
Bobby?
So I actually have to jump out and come back in. But before I do that, I'll ask the question. So you guys, I'm just having like some screen problems here and I want to reset this whole thing. But if you missed our Monday show, which we did do live on YouTube, on X, and on other things, we had Mike on again. And we talked about one of our key trades in our newsletter, which was Tesla, right? And I pulled it up to talk about it today because I wanted to kind of go into the way that we structured it. And the Tesla trade was to buy at 435 or better. I think it was 435. Mike, am I right about that price?
Yeah, it was buy at 435 or better just because it's Tesla and it can gap up. We actually got the gap down on Monday, it was technically entered at 425.32 area.
Right. And actually, my computer just fixed itself. So now I don't have to leave. But the reason I want to bring that up is because the people watching our live show on Monday, including Jim, because Jim hadn't done that trade, had the opportunity to potentially get in it. Jim, I think you said that you might buy some calls or something.
No, you remember what I did? I went, it was 304. The market had just closed when I went to buy some calls because I saw that pattern that I loved. Well, you guys love it. Again, and for you guys who are watching, unfilteredinvestor.com, where these two use their technical analysis for trades and for intermediate portfolio management stuff. It is unbelievable the hit rate that's going on there. Unfilteredinvestor.com. But Bobby, didn't mean to interrupt you. I did not get in.
No, it's okay. I was very happy that we had the opportunity 2 days later to look at this trade because it's a different result with the second one we looked at, which was Ubiquity. But we'll look at that in a second. But Tesla has gone ahead and gone just short of the first target today. And I want Mike to talk about what could happen here. In other words, it could rotate down. There's all kinds of things that could happen, but we will be strict to our levels. Mike, take over.
Yeah. In the Tesla trade, the first official target is right around just use 451.25. That could either be used as a profit-taking target or at least at a minimum to raise stops. At that level, if we get to that level, the trend is still up in Tesla. This is not a long-term trade. This has targets. It could lead to Tesla retesting their highs from November 3rd. Well, the key thing to remember is this is not necessarily where the stop goes, because we have 3 targets on this trade. The second target is right around 482.65. The final target around 474. If we do hit that first target, that 451.25 area, 451.50 area, the official invalidation point where the second and third targets are not valid anymore, it would require a close all the way back at 408.52 or a trade through 399.94. So this does not have to go to these targets in a straight line, but pretty much based off of the way Tesla behaves, I doubt it will take a long time. Either something will fail on the pattern very rapidly, or it'll just keep grinding higher.
Is there a situation, Mike is or Bobby and Mike, is there a situation where maybe you hit your first target and take a third of the trade off, and then you raise your stop, and that potentially this trade ever morphs into like a long-term hold if it keeps grinding higher and you catch a runner?
The way that we do it, and then I'll let Mike answer. The way that we do it is we give out 3 targets, and basically we treat you like adults. Do what you want with the 3 targets. Now, for me and Mike sometimes do things differently. For me, the first target is when I tighten my stop up to a profit. Right now, we give stop adjustments as well, but I always take mine to a profit because, unlike Mike, I'm a small child and I throw tantrums and stuff if I lose money. So
me too.
To get to that first target, I go to a slightly profitable stop and I go from there. Based on that, yes, I do turn some of these into longer term holds. Mike?
I do, based off of how, if it completes the pattern quickly, there's a time analysis in it that we don't normally discuss, but if it completes a pattern quickly with momentum, yes, it can turn into a partial long-term hold that then I look to possibly re-add on pullbacks. If it's grinding higher and it takes a very long time, the probabilities, and depending on where it is, you mentioned earlier when we started this, everything matters on location. If a stock is, let's say, coming off a major bottoming double bottom pattern and has a long way to potentially run, and then passes some key metrics, then that can easily turn into long-term hold. With Tesla being at or near all-time highs, if this pattern completes, it would be at 474 for the technical pattern to complete, the all-time high being 488. Yeah, there's room to possibly hold a little, but would I be holding the whole thing, hoping that Tesla at an insane PE of 286 goes to like 600 or 700? No, I wouldn't personally. I've already mapped out the harmonics. And if anybody wants them, if this does break above 474, the next key area is 485.50 to 488.50. If it blows through 488.50, it's 496.90. And then 522.80 are the next key targets higher. But if we get up to those levels, I would definitely know where your trailing stop is and not just say, I'm going to just hold this forever.
So here's a quick question. Do you guys, with the subscribers to Unfiltered Investor, if they are looking for a spot to get into a stock that they want to have as a hold, do they ever contact you guys and you'll run a technical analysis on it to potentially where to get in, or no?
No, not at this point. We put where to get in on every single trade.
Yeah, but you don't take recommendations yet of like if someone's saying, I'm looking at, we talked about lumber in the rundown. I'm looking at buying Weyerhaeuser.
No.
Yeah. Okay.
People do on my live stream every day, Jim.
Yeah,
people ask, they'll come up with stocks, say, could you take a look at this?
Sure.
And sometimes, hey, guys will come up with some great ideas and I'll say, hey, that's a really good idea.
That's why I mentioned, because
and it could turn into a possible recommendation or a possible personal trade.
That's why I mentioned, because I have had people come to me and say, "Hey, I'm taking a look at this stock. Can you help me get a technical breakdown?" And I look at it like, "Shit, yeah, this is a great one." And then all of a sudden, I'll be a new owner of that stock. But anyway, let's move to whatever you want to look at.
Let's look at UI, and then let's go back to some of the classical markets. UI is another one that we had a recommendation, and kind of moved us against us at first. But again, we don't change anything. Like, we have an entry, we have a stop. So this is another one we entered on Monday at a better level. We did another or better option on the buy-in, and we got in on the open on Monday. Go ahead, Mike.
Yeah, got on in the open. I don't have the stops in front of me. If you,
I got them. Go ahead.
What are the stops? I don't have them in front of me.
Oh, you didn't want me to just know that I had them in front of me?
Oh, he's looking for him. Okay.
I'm looking for him. So
we are a crack team, people.
Close below 535.80.
535.80. So again, we had the little gap down. This wasn't aggressive. It was based off a weekly pattern. We don't want it to pull back. Again, this is a weekly %B buy pattern. So far, it's just basing. That's why we have to stop a little lower. We had cycles at the top coming out of overbought conditions. So again, a little gap down on that, but this is a weekly pattern that we're looking for another rotation back up. So far it has not closed below the 535.80 stop level, which is a key harmonic. Why that's chosen? Because if it does close below that level, there's a probability shift that it can retest the lows from Friday the 21st, that area. So do I want to ride it all the way back down? No. That doesn't mean the stock, again, can be off the radar. What I don't want to do is ride it down, because then it sets up another pattern, especially a bigger bottoming pattern, then I might be interested in getting back in, but I'm not taking the chance, since it is against the daily rotation zone, of just riding it down and then possibly, without setting up a new pattern, breaking two new recent lows.
Bobby?
Yeah, before I go on, I want to make sure that everybody knows we are live here. So if there's anything you want Mike to look at and I find it interesting, put it in the chat, or you can even hit me up on X/Twitter, because I'm looking at that as well. Should we go to NASDAQ Tech, the Qs?
Sure. The Qs, sure. The Qs, interesting enough, also are in potential. Now, this is not the highest probability double top area yet. This is the minorly lower probability potential double top yet. Still has the magnet prices higher. When we talked on Monday, things like the Qs were not in potential double top territory. Now they are. But again, it's a long way off from ever triggering. In the short term, trend is still up. There's a key gap open reversal that I'm watching for at 624.84. We get through, there's been some topping price action here. If you see back 4th of November, 5th of November, we spiked up above that key reversal gap open that didn't occur till the 12th, but there's already selling pressure up there and confirmed by the gap open reversal on the 12th. So that's still a magnet price right there. If we can get through that, especially if we can get through that with some momentum, and this doesn't have to happen over the next couple of days. This could happen even next week or so. Then the next price is 629.98, which is also right near the key low from November 3rd. And right above there is a gap that still have to be filled, 632.08. So those are my key targets that I'm looking for higher. If we do break to new highs, I'm just updating the levels right now. The key level is 644.04. So just 644 is the next key harmonic level if we do break to new highs in the Qs.
Perfect. Makes sense.
Mike, what do you think about it? Should we look at the Russell?
Sure.
Given the performance today?
Do you mind if I do the futures on that one?
No, go ahead. Do the futures.
For you guys who might not have seen the beginning of the show, Bobby had mentioned that the Russell was doing better than the other indexes. It obviously seems like it is a play on the Fed rates, particularly on the short end coming down. The names in the Russell are 3 times more likely to use revolving debt, so they are highly rate sensitive, and that is one of the reasons that chart looks a little better than the other two.
Yeah, just in terms of futures, I mean, the Russell's up 180 basis points. The NASDAQ in comparison is only up 18 and 18 basis points, and the S&P is up 35 basis points. So the Russell definitely major outperformance in here. This is what I'm keeping an eye on, because now we also have the Russell in potential double top territory. We broke out of a pullback channeling flag pattern where we held key support with the rising rotation zone. The Russell still has upward price action. In the futures, it's 25.33 is the next key target. Then the next target beyond that's 25.51. If we break to new highs in the futures, it's 25.99.7. So 2,600 is the next target above there. Besides the major weekly potential topping pattern, there is if we had suddenly reversed tomorrow and wiped out the today's gains, there is a minor double top. I doubt that will trigger, but that would be a potential pullback. If that happened, it wouldn't be a major topping pattern. It would be a minor topping pattern that would possibly pull back. It's a lower probability one because it's got the separating rotation zone, but it could only pull back to 24.30, 24.28. So it's no crisis mode, but it is something to keep in mind should it trigger over the next couple of days before it's invalidated.
So tell me this, can you pop up the weekly bars too? Because if I'm thinking of actually getting more Russell, more small caps, and I'm talking about like something to hold for several years, at what point in time am I thinking about that?
At what point in time were you thinking about that? Well,
should I be? Okay, it respected the rotation zone, right?
And last week, and I believe this was in the newsletter, Jim.
Okay.
If it took out the prior week's high, and then followed through the close. So guess what? I was watching the prior week's high, which was officially 2411.9, so 2412. It took that out. So
with authority,
it was based off some momentum buys, and then it followed through the close. So that was the entry signal that was confirmed on the close for the weekly buy pattern in the short term.
Okay. So it right now, gun to my head, if I am looking at more exposure in small caps, this is not a bad time.
I'd still be looking now for any pullback trades into the daily rotation zone.
Got it.
We pulled back yesterday right to the very key, just above a very key support area with the rising 8 EMA, and then we broke out today. That's when we call that 8 pushing the price, because the 8 EMA is coming up. It pulled back there, and then a lot of times you'll get these launch patterns once the 8 is getting in the vicinity of connecting.
That makes sense.
And we definitely got it today. So you could be chasing it into close today. Personally, I'd wait for the next little consolidation pattern and then look for another potential buy setup.
That's what I'll do. Or I should have just read the damn newsletter, which you wrote about the Russell on Sunday. Sorry about that.
Another thing, what's fascinating, and this pattern may never trigger the potential double top, but you see if it were to trigger, if something were to happen, sort of minorly catastrophic, don't know what that would be, but if we did close below 2,300, technically 2,300.7, but just remember 2,300, we could be out of the way of the 50 EMA on a weekly basis, and that would trigger a potential double top pattern that could take us all the way back to the 200 weekly SMA. So that's the only thing I'm keeping an eye on from longer term positions, which would also completely invalidate that %B buy bar. Would I recommend having a stop all the way back there? No, I'd be out of it long before that. But that's a very key point. So set an alert, anybody, at 2,300, because that's a major line in the sand for the Russell.
Makes sense to me. Makes sense. What do you want to look at now, Bob?
Oklo, it's a request from Mark. He's requesting OKLO. I know what I think of this one, and I don't like it yet. But Mike, what do you got?
Well, OKLO, it had a head and shoulders pattern.
Yeah.
That was triggered back on November 4th. And we've proceeded to grind lower against the daily rotation zone. It's got a little pop since then. And we did have a confirmed confirmed minor double bottom. You can see here a confirmed minor double bottom against the daily rotation zone. So that's actually going to trigger to a fish. It's been confirmed twice. It's officially going to trigger today. So could we go still higher over the next few days? We're getting to cycle tops. Yeah, there's some room for this to play out, but overall, there is, if we close this week, if you're looking for any bullish setups in it, it has to follow through with a close above last week's high. That would be a aggressive weekly percent fee buy because it has closed below the weekly rotation zone. We are still playing out that head and shoulders pattern potentially. So we could see some more upside if it does close above last week's high, but that does not mean OKLO is going to return to new highs. The overall, if you wanted some aggressive targets on OKLO to the upside, it would be right around, it's first got to get above 105.50. Then you're looking at next aggressive target is right around 117, then 123, and then major target of 136 if it can even rally that hard.
I'm going to ask a stupid question. I know I've traded it. I've looked at it. I can't remember what Oklo is.
Oh, it's nuclear power.
Oh, right. Okay. And I have the other ones. That's why I have UEC and I have the ETF. Okay. Thanks.
Real quick, Remo tweeted to me that my stream is cutting in and out. I just want to know if it still is, Remo, if you're still here. Mark had a follow-up. He said, OKLO is hard to borrow. Now, if that to me always means that they're looking to short it, right? And I would call this a short chart, but I never do that. If I'm going to short a stock,
it's
always options for me.
I sometimes short them by borrowing it. But by the way, isn't that specific to different brokerage houses, or would that be endemic across the landscape? If it's hard to borrow at one, it'd be hard to borrow at the other. I don't really know, because again, I'm an options trader as well. I would just buy the puts instead. It
is specific to the brokerage, but again, if it's generally hard to borrow at one, it's
probably
generally hard to borrow at, unless there's something specific to that broker.
Okay, makes sense.
Now, if you're looking to short, and I completely agree because the trend is still down. So personally, if I was going to do a play in this, I would be looking to set up short option plays after this little rally is over. Watch for a topping pattern because we still have the bigger key downside move to play out. The key things on a rally, I went over the long case, but for the short case, because the probabilities for more downside are based off the bigger pattern, which is this big head and shoulders pattern. The key target I would be using is right to structure a trade is somewhere around 76. So you might have to go to 75 or 77.50 with the options, but it'd be around 76. Why? That's the first target on the head and shoulders, and that's a very key harmonic. If we were to close below 76, that sets up the next target areas being 52 to 56, and then potentially about 30 to 35. So that's the way I'd structure downsides. In the short term, I'd be using that 76 target on the next rollover play. The 200 is in the way of that, but if we broke through that, then I'd be looking at 56 area. 52 to 56 is the next key target area.
Makes sense. That sounds good. Can we
Mark
switch?
Also said it could be a squeeze. I got a couple more in here, and Remo, I see yours. Remo wants to look at one, but I want to put up Big Beat real quick. Big Beat, I don't know if we've seen you in here before. I'm really happy to have you.
He's a good friend.
Yeah, no, I don't remember any questions or comments from him. Big Beat says, check out my call on CRISPR. I went to Big Beat's Twitter, and he does have an announcement that his service called out CRISPR, and it was up 8% today. So good call on that one, Big Beat.
Yeah,
very
Big
nice
Beat,
to
Quasar Markets too is Big Beat. If you guys don't follow him on Twitter and watch his shit, please do. It's awesome.
Yeah, I don't know where Wesley Chapel, Florida is. I'm gonna have to look for that. So go on, Mike. What do you see going on CRISPR past this? CRISPR is gene editing, Jimmy. I think you know that one, right?
Good. Yeah.
Well, that also, with the price action today, triggered an inverse head and shoulders against the daily 200 area. So in the short term, based off the stuff we do, the targets are going to be, the short-term targets are roughly 56.75, 58.55, 60.26. The longer-term targets, one second. The longer-term targets, and I would only be using these longer-term targets if it can sustain above the 50 EMA, which is this green line here, which is about 57.70 right now. But the next longer-term target, if it can complete the head and shoulders pattern, would be 63.25. Keep in mind, there's also a gap fill that's left behind to 61.97. So those are areas that I'd definitely be raising a stop. The only thing that turns this into a super long play, if I were going to be in this for a very long term, it's got to still grind higher and then close above 67 on a weekly basis. Otherwise, it's still just a bounce play. Can take multiple weeks, but it could just be a bounce play before the next rollover.
And Stephen, I guess I'll talk to you at another time, but this is to Mike and to Stephen for a later date. When you see it respect the 200 so well and come back above it, I wonder if that's what gave you your reasoning for getting long. And Mike, do you think that's an important issue there?
Well, I definitely like it we had a bottoming pattern against the 200 area.
Exactly. That's what I mean. Right.
So yeah. I like those kind of setups. Do I just magically buy because something hits a 200? No, I need also a pattern or some kind of entry signal against that 200 area before I will trigger a trade. I don't just buy or sell at key moving averages.
That makes good sense. Can we take a quick time out?
Jim, that goes to the things happening at an area as opposed to things just happening.
Exactly. Can we do a quick time out? Luis, will you put the banner up?
Go.
For those of you who watch this show all the time, and we appreciate that you do, the support we get is amazing and humbling. Please do us a favor here, and that's try Tradier Pro for 3 months for free. Just scan the code there. We talk to options traders all the time. Guys have been trading options for decades. Guys have been trading options for hours, and they all say the same things, is that Tradier Pro is the top of the line. It is an outstanding system, and you can get it 3 months free just by scanning the code. If you don't want to get it 3 months free, just scan the code so you let our sponsors know that people are watching. Just please do that for us, and thank you.
Yeah, I want to go to Remo's stock here. It's actually not, well, I guess it's the stock ETH, which is an Ethereum ETF. ETHA, I'm sorry, ETHA. See, iShares Ethereum Trust, Jimmy.
Yep.
Well, let me put up, since I just do my analysis straight on Ethereum and not the.
Well, you can just put up Ethereum. It covers it too, right?
I just want to double check something because sometimes these ETFs slightly different in their price action analysis. Just want to double check something to see if I was.
Although something happened to our stream on Twitter, and now it says stream not available.
Yeah, I don't know what's going on with that.
It says so when Remo says your broadcast is cutting in and out, I think it's an issue with Twitter, because right now we're not live on Twitter, but we can just.
Oh, we're live on YouTube, guys, as well. So
good.
All right, it does have the same pattern. I just had to verify it. On Ethereum, today is an official trigger of a double bottom. It's slightly lower probability since it's still against the daily rotation zone. It is coming out of pretty oversold conditions. I want to check something else just on that. I just have to go back to the core. Sometimes I have to look at the core underlying to just verify things, because actually on the core underlying, since you do have the weekend involved in this, the rotation zone is out of the way. But we'll finish the analysis on the iShares. So officially triggering a double bottom today. Let me go through the stops, or where the worst case scenario, not where you need to have a stop, but what would invalidate this pattern. If ETHA dropped back below 2143 on a closing basis, the pattern would become invalidated, or if it traded intraday below 2103. Keep in mind, it is now against the weekly rotation zone, but this pattern could easily take it back to the weekly rotation zone and the 50 EMA on the daily. The targets are 2490, 2563, 2635. Those are the key targets. Does that mean it's a long-term hold just yet? What's interesting on Ethereum is it came back down to the 62.5 harmonic and didn't close with a red candle below it. It closed on a daily basis with a green candle right at that level. Came back down. You can see here, did this, let's see, 2069, 2070. So closed a penny above the probabilities on this specific instrument of tipping the probabilities long-term. We watch for key buy setups or inversely sell setups on rallies between the 50% harmonic and the 62.5, as long as it does not close below the 62.5. So we did not technically close below the 62.5, and we formed a daily bottoming formation. So this is for at least a bounce play only. If crypto decides to take off again and continue to run higher, and this is one I need to get some momentum coming back in. Otherwise, I personally would not turn it into a long-term play. The 37.5% retracement harmonic is the exact same target as the triggered double bottom. And then above there, fascinating enough, it's the breakdown level. You see we had a little base here that broke down and started the next significant leg lower. And that breakdown level is right at the 50% harmonic, 2850. So if you're looking to change this into a longer term hold, which I wouldn't do unless it can sustain above the 50-day EMA on at least a closing basis, then my next target higher would be 2851. And then we have a major harmonic cluster between 3035 and 3058.
Makes sense. Makes total sense.
Okay. So Luis said the streams are working, but I just went to isitdownrightnow.com, and it does say that twitter.com, the server is not responding. So hopefully you guys are still watching on YouTube. I don't know what we can see in the chat from YouTube, but the responses have stopped, except Remo did ask Mike, or he said more so than asking, if the SPY has a bull flag. I don't see it, but maybe it's in one of the other areas. I don't see a bull flag. And
that's what I was kind of talking about earlier. I kind of traded that, what I thought just the last couple days, if you put it like a,
that was just in my book, this is just a horizontal sideways consolidation pattern with the rising 4-hour rotation zone.
But Remo, to your point, just from day trades, as soon as it took out yesterday's bar, I did trade it mostly long today and made some money. And then with the money that I made when I closed it out, I bought an option for about half that has about a week and a half to see if we can push a little higher on the downside.
One of the problems, and again, I'm not talking to Jimmy here. Just a lot of people will do that. They'll say, I'm going to buy above the high or sell below the low. And to me anyway, and I know to Mike as well, unless there's something else going on, you're flipping a coin to me. Even though it is breaking high.
One of the reasons I liked it is because the daily rotation zone, on the hourly, I think it was the hourly rotation zone, looked good to me. Looked like it was rising higher. Yeah, that's what I did.
The hourly, Mike, if you could.
I'll put up the. Let me just jump to the futures real quick, because in my live stream, I've been mentioning watch that 4-hour rotation zone. I've been talking about that since Monday morning, which we've held on a closing basis. And we did have a significant level at a 68. I called out 68.55. But we came back down right to the bottom of that rotation zone and rotated back up. And roughly, if you're watching the 4-hour one on the futures, you're watching the 1-hour one on the spiders. So if I go to the spiders and call up the 1-hour one, there you go. See, holding the 1-hour rotation zone on the spiders, and the key significant level was lower on the spiders, right about 682.60, and then it had to follow through above 683.35, both which happened. And it then ticked off the magnet price, which I've listed out for quite a while, because once we got back above this 675 level, the next two prices were 679.99, and then the next key price was 684.84, and the high today was, what was it, 684.91. So we've ticked off the next two key harmonics right there.
Gotcha. Yeah, I got out of it. Well, except I have an option on for a week and a half to see if it can chew through. But I made money today and kept it. So I'm glad of that. Yeah.
Let's do this if you guys will allow me to turn it a little bit. And let's look at gold and silver and then call it, because the stream is a mess.
Stream's a mess. That's a Twitter issue, right?
It's a Twitter issue, yeah. And then it's like we're seeing, I'm seeing the numbers just not budge from where they were half an hour ago in terms of viewers, which means if people are joining, others are leaving, and we're not getting any Remo's on YouTube right now. But he would know ahead of time to go onto YouTube to watch it. But
yeah, some people did not, right?
So let's just look at gold and silver and call it.
We're coming up against time anyway in 10 minutes or so.
Yeah.
So can we do the futures in that, or do you want geo?
Yeah, do the futures. Do the futures.
Gold and silver. Again, just for point of clarity, the key line in the sand, we are in potential double top territory. I always have to say, may never trigger, may be invalidated before it triggers, but the key thing is to watch is 3,900. That's the key level in gold. Silver does not have a potential double top right now.
So you mean a settlement below that 3,900 would trigger that double top and portend more downside?
Yes.
Yeah.
In the minor, let me see. Did we qualify a potential? No, we did not. No, hold on. Let me just verify this. I like to be as accurate, don't like to give out misinformation. 4273.2 would do it. 4273.3. So we do have a little potential double top here on the daily against the rotation zone. So if it were to drop back and close back below yesterday's low, which is 41.94, you could see a short-term pullback. Again, I would not be shorting that. What I do is, because the trend is still up on the daily basis, the probabilities are still higher on the daily basis, the probabilities are higher on the weekly basis. So when a pattern like this triggers, I use it to watch for potential pullback buying levels, where I'll look for another subsequent pattern. And the key targets for those pullbacks are 41.54.4, 41.34.5, and 41.47.7. Also, there is a gap left behind to 41.40. So I'd be looking, if we did trigger that, for a pullback and then possible look for another bottoming pattern. That's not, if you look at the weekly, you see here, what does that take us back to? And we talked about this, I believe, on Monday. It's been hugging the 8 EMA. So I've been looking for, like, I'll call it not longer term, because longer term has been since it broke out months or weeks ago. But for a more medium term, anytime it pokes into that 8 EMA area, which is right now right around 4,100, and that's going to keep rising. So if this double plays out, it's against the 8 EMA, and I'd definitely be looking for bottoming patterns on that bigger pullback. That would actually be another gift in my book. Until then, if this pattern's invalidated, the short term 42.74 was the target. We've listed that multiple times. That's in the Unfiltered Investor and on my live stream. And 43.35, 43.36 area is the next key harmonic target higher. If gold continues to new highs and breaks above 43.98, the targets are 44.60 and 45.22.
Okay, that makes good sense. You're going to go to silver?
Silver. Oh, is there? Yeah, there. Did I miss? Let me see. There is a minor. Let me see. A minor daily double top pattern. There is not a weekly double top pattern. Like gold had the weekly double top pattern.
Yeah,
there is no such pattern in silver.
Right.
The next key price higher is just above $60.32. Other than that, we do have a minor daily double top. Should we reverse and close below 57.22?
Then how big of a pullback will it be?
Well, I'd be looking at this. This would not be one I'd short either, but it would reconnect with the rotation zone roughly at the first target being just above 56.
Right.
56.12.
Okay.
The next two targets are 55, 57, and 55. So anywhere in that, I'd be looking for short-term resumption of trend up patterns.
That makes good sense. Okay. Bobby, you want to look at one more thing? You want to look at Bitcoin and see if that disaster is ever going to stop?
We can look at that.
All right. So again, when they're double top patterns, they're great for especially when you have a strong trend up. They're great for identifying key pullback levels to hey, I'd like to go purchase this, not to short into it.
Makes sense.
Bitcoin. We mentioned on Monday I was looking for a potential double bottom, which we did not fully get. Right now,
because the bottom of that wick is too high compared to the other one, correct?
Correct. It missed by like a few dollars.
Got it. Yeah.
I also mentioned I was watching for a close still above the same point. That point being 93,162. Again, this day is not over, but we're trading 93,466 roughly. So still going to be looking for that today, because on the weekly basis, we are still coming out of very oversold conditions, separated from the weekly rotation zone. In the short term, though, this could just be a channeling corrective pattern, which is why I'm keeping an eye on it. You can see the upward channel here. If we can start breaking above that, the upward channel. So the first key thing I'm watching is a close above Friday the 28th high. And then I need a follow through with a close above the channel. Then we're into what we call an advanced clear path move. The targets are going to be the 50 EMA right around 98,600. Then the next two targets officially are 101,300 and 105,960. What I am doing is splitting the difference because we have the 50% retracement level from this whole sell-off at 103,410.
Okay.
So that is my next key target. I would definitely be raising a stop aggressively at 101,300 area. If you want to be a little more aggressive, just raise it at 100,000. And this is still for a bounce play only. It needs to get above. So we'd have to have continued momentum that would close back above 109, 132 to shift the probabilities. Other than that, it remains in a bounce play only, and that could retest to 200, and we'd be looking still for other rollover plays.
Okay. And at that point in time, I would be buying some MicroStrategies puts. That guy, man, that guy, I bashed him the other day, and I know you know him a little bit, Bobby, from some conferences, but the certainty with which he always talked about that MicroStrategies was so irritating to me. And again, I take no joy in anyone losing money on it, but I hate when guys, it smacks of charlatan when everyone's like, no, this is going to 1 million, not it could go to 1 million. That's not the way he talks. Do you agree with me, Bobby?
That was the whole basis of my talk at it wasn't really a Bitcoin conference. It was a wealth symposium, but it was heavy on crypto. And that was my whole talk to those guys, is that the biggest problem you have is the idea that it can't possibly go to zero, because that's the same thing they said about Lehman Brothers and about General Motors and about Bear Stearns, that these things can't go to zero. The one guy even went so far to me as to say, well, it can't go to zero because I have a lot of bids at $5. Like, if it gets back to $5, you don't have enough bids. You don't.
Also, there's no difference between $5 and zero, my friend. You know what we mean, right? Yeah.
Bob, remember, crude futures can never trade below zero.
And they did. Negative $40. Yeah, that was a bizarro world. There's no question about it. Yeah.
Anyway.
All right, let's wrap it. I'm so sorry, guys, that we were having difficulties on the Twitter stream. That is irritating to us. But thank you guys so much for trying to stick with it with us. This has been Tradier's The Trader's Edge. I'm Jim Muro. It's Bob Iaccino. That's Mike Arnold. And by the way, if we hadn't said it enough, join these guys and myself on unfilteredinvestor.com. The breakdowns these guys give with actionable trades is amazing. Thank you to our sponsor, Tradier.
Real quick. Check out Mike daily free live streams on YouTube.
Yeah.
It's Path Trading Partners YouTube. Mike's on there by himself, free live every morning.
Yep. He's the best. And thank you guys for joining us, and we will see you next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.